Welcome to Real Vision Crypto and the Defiant, our weekly crypto show where we look at the intersection between macro crypto, broader economic trends, and of course, DeFi. I'm Robin Schmidt from the Defiant, and joining me today are Ash Bennington, Senior Editor and Crypto Editor at Real Vision, and of course, Camila Russo, the Chief S at the Defiant. There are two kind of big topics that we want to look at this week. One of them is the ENS Ethereum Domain Naming Service, its airdrop, and what it means for the future of governance, decentralization, and some of the weird douchebaggery around NFT.NYC. We have two people who live in the Big Apple. I'm curious, Ash, what you make of the NFT thing. You were right there in the heart of it. What's going on there?
Well, it really is interesting. It's kind of a surreal space. I was at NFT.NYC last week. First thing that struck me was the extraordinary degree of enthusiasm that end users have for this space. It's something that I haven't actually seen myself. The way that people relate to these tokens in an emotional way, because of the artistic component, because of the expressive component, it's something that I think is really interesting. And as I said, it's something I've never really seen before at this level in the space. Also surprised at the level of speed of development in this space. When you actually go there, when you meet with people on the ground, there's just an incredible amount of development going on that you don't hear covered in traditional financial media, certainly. And I would argue probably not even in the mainstream crypto media. This really is a fascinating niche. That said, also, heard some disturbing things from insiders, allegations of wash trading, talking about perhaps a space that's moved up too fast, too far, too soon in terms of price action. But I think this is an intriguing space. I'm not really convinced yet that we have our head around what NFTs are. I'm not sure the definition that most people out there who aren't in the space think of this notion of a strictly digital collectible, a kind of digital art, is really all there is to this space. It's a fascinating one, and I think definitely one to watch.
Cami, you were right there as well. Did you go to NFT NYC this time?
I didn't go to the conference itself. I did go to some of the events, and it was just wild. Like the atmosphere, the partying, the number of events. I think, I don't know, I had probably like 4 different invites each night that week. So yeah, it seemed like a lot of hype. I think, a lot of the people I talked to at the events were like, like this is looking a little bit scary. Like there was definitely the sense of it's feeling very frothy, like tons of money flying around, just like people, like dressed up as apes waiting to get into like the different like NFT parties, and dressed like unicorns and CryptoPunks, and like shouting GM in the middle of Times Square, you know, that sort of thing, which it's really fun. And I think, it just like reflects the fact that this went from very niche and like fairly unknown to this like phenomenon, global phenomenon in the span of less than a year, with people just making absurd amounts of money on what in its face seems like, just like JPEGs. So it's crazy. Like, I was just looking at some of the highest sales for NFTs. Of course, like CryptoPunks going for $7 million, and several other NFT projects going for over $1 million. And so it's you have like that exuberance of people who made crazy amounts of money and were seeing each other face to face for the first time, and were partying together, and were just like enjoying the proceeds of their newfound wealth. So that kind of all exploded in New York last week. It was pretty fun to be there, but also a little bit like concerning. Like it definitely did feel like very toppy.
Toppy in the sense that this is a lot of people who have lost sort of touch with reality to a degree and are now enjoying the proceeds of their wealth. It feels in some way like there are echoes of the ICO time when ICOs were raising, millions and millions and millions, and then they were spending a lot of money on parties and exposure and so quote unquote marketing. Do you remember that phase, Ash? Does it bring to mind, echoes of that? Because it does feel similar.
I do. I was actually covering markets at CoinDesk at the time in 2017 during the ICO boom mania. It does feel a little bit like that. It also feels a little bit more, I guess the word is maybe mainstream. Like the difference between the ICO mania and I think what we're seeing in NFTs is that people seem to have an emotional connection to this in a way that they didn't to ICOs. Obviously, making money is a little bit abstract. Everyone wants to do it, but there's something strange, I think, about the way that people are relating to the artistic, expressive aspect of this. It reminds me of something I see from my Facebook friends who are like hugely into Comic Con, who wait in line for 90 minutes to get a poster signed by their favorite comic book artist that most people have never heard of, and they're incredibly excited to meet him or her. There's a level of kind of end user demand for the actual connection to both the artistic component of it, but also to the community. Camila mentioned Bored Apes when she was talking about this idea of these huge parties. There's something about the community aspect of it that people find a way through these tokens to connect with each other, to consider themselves as part of a community, part of a movement, part of an ideology. There's something in that too that, again, I don't think we've fully teased out yet, but it seems to be incredibly powerful. I own an Axie that I just bought that I haven't used or played with yet because I haven't started getting into the game. But it's something that I'm incredibly curious about, and obviously here at Real Vision, it's difficult when you're covering these topics to want to own them. But this is something that I think that people who are in the space each have to sort out in their own way. My feeling is if you're not taking at least small positions in this so you can play around with the underlying technology, you're not really able to cover it properly. I know that that's something that's evolving as well. But it sort of brings to mind just the general thesis here that we're seeing the world change. We're seeing the way that we think about technology change, the way we think about money change in some very core and fundamental ways.
It definitely feels like the ICO boom era, but I think it's worth keeping in mind that for all the froth and hype and booms and busts of like 2017, there was like actual innovation that came out of that time. Like a lot of the ICOs are today's biggest DeFi projects. Like MakerDAO was created in that time. Like I think Aave raised money in like during the ICO boom when it wasn't called Aave, and so like a series of other projects, 0x. So a lot of like today's core DeFi projects and infrastructure were born out of that hype period. I think we might see the same thing with NFTs. So we're seeing kind of all this money flow into the space, all these new projects being created, and sure, like most of them, I think won't be successful and will die off over time. But I think we'll see, some of the core long-lasting projects will have been born out of this hype cycle. And so yeah, I think that's kind of what everyone is on like looking out for, like which are those big bets. So
Robin, can I jump in?
I wouldn't discount that. Like,
Robin, can I jump in and just add one more point? Something I said when I was speaking about this was this idea that I'm not really even sure that we know what NFTs are yet. I think there's so many potential applications here. If you think about what an NFT is at the most fundamental level, at the technological layer, what they really are tokens that have a unique digital fingerprint that are unique, so that there is only one of these in the world. That has manifold potential applications. And I'll just name a few things that I'm thinking of, and I think things that we may be hearing about in the future. So obviously, we live in a world right now that's totally virtualized. The three of us are here having this conversation from different parts of the world, sitting in our home or our home office, having a conversation with your computer camera. And so we've seen this virtualization of the workspace. We've seen virtualization of friendships in social network now for over a decade. So the identity question, it's a cliche now on the internet to say you don't know who you're talking to on the other end of your phone or your computer. So I think this idea of the virtualization of identity is something that NFTs can potentially play a very large role in. The idea of social networks and NFTs merging, metaverse, which I know is something that you guys talked about last week with Elaine Lee, the potential for metaverse and NFTs to merge as more of an identity or identifier property, collectibles, fine art. other applications that we haven't even talked about yet, like ticketing. So if you think about what it would mean to potentially have a ticket that was issued as an NFT, there are two really significant potential applications for this that are novel. The first is if anyone's ever gone up to Yankee Stadium here in New York or to Madison Square Garden and bought a ticket from an event from a scalper on the street, the one thing that everyone is afraid of is buying a ticket that's fake, that's counterfeit. When you issue tickets on NFTs, there's the potential to have a mechanism to verify that the ticket that you've purchased is in fact real and legitimate and will be honored at the event you go to. But it's even more significant than that. One of the things that's fascinating to me about NFT technology is the potential to retain a residual economic interest in a token for the original issuer. So, what does that mean? Well, it means if you're the New York Yankees and you sell a ticket that's on an NFT at face value for $100, and a scalper resells it, on an avenue in the Bronx for $2,000, you can retain an economic interest in that in perpetuity. So that the definition of scalping tickets is something that changes because the fans are able to buy tickets that they know they can verify and validate as legitimate, but the teams in the league can then potentially take a cut of that in a way that they couldn't on a paper ticket. So these are all just some big picture ideas that I'm trying to get my head around. And I think that the space is really trying to get their head around about what an NFT really is and what the potential applications for this technology will be in the future.
Well, it's a broad subject. You are speaking to someone here who is an NFT degenerate. I own many, many NFTs. And I spend a lot of time in the NFT communities trying to understand where good things are happening and where bad things are happening. There's definitely parallels with the ICO phase. But what happened at that particular point in time is that projects raised money. And then there was a kind of expectation that at some unknown future point, they might deliver a product, might, but there was no expectation on that. NFTs operate under a different set of circumstances, which is communities are extremely demanding of developers, and the pace at which things get executed and delivered is just unbelievable. And they all kind of read off each other. So it's in altcoins, for instance, it always feels like a bit of a zero-sum game. Like your project wins, my project cannot win. My project wins, yours is dead. NFTs are much more collaborative than that. And you're starting to see synergies emerge where they feel like they are all one kind of sort of meta community and can help each other out, whether that's, say, a project has its own internal currency, its own token, the ability to make that token then available to another community so they don't have to spin that up and get it bootstrapped and with liquidity providers. That's pretty interesting. But then there are also, hosting a party together. I know it sounds really basic, but actually, when you have these shared communities and shared interests, you have this cross pollination of ideas, and all the best ideas transmit very, very quickly. And it has been somewhat kind of an ecosystem in which ideas are sort of protected. In NFTs, they're absolutely not. Everything is shared. But you also just have this real sense that communities own and govern the projects. And yeah, the artistic thing, the emotional attachment to it, I mean, it can be broken in an instant. But what we have is just an exploration of a set of ideas that, as you rightly say, can express ticketing and they can express your connection or your sort of Kickstarter-esque stake in a project. But, NFTs also represent an LP position on Uniswap. And that's a
Mm.
very functional, basic thing. It's represented as an NFT. But they can also evolve over time. They can be mashed together to create a new NFT. And yeah, they are a little expensive on Ethereum, but we see new layer ones springing up where all of these things are much, much easier to do. I honestly break NFTs down to one simple thing. They're just fun. That's it. They just put the fun back into this space in a way that was somewhat missing. Like our space, DeFi, was fun, got really serious, and for all the right reasons. Because when things are getting hacked for $1 billion, then you need to get serious. But what I love about what I'm seeing right now is that NFTs are evolving, particularly these PFPs, into assets that really break down barriers in gaming. They break down barriers in DeFi. So I saw a project today announce that it had put like a serious chunk of its treasury into Barmbridge's Smart Alpha product. This is a product that is deliberately designed to help you beat the drops when the market is volatile. This is a project this is an NFT project. They shouldn't know anything about DeFi, but they've set up to say, okay, we know our treasury is valuable. When the market is bearish, we know what to do, and we're using DeFi to help us sustain ourselves through a bear market. That's fantastic. And that shows me that, this space is growing up really, really fast. So that gives me the opportunity to do a delicious little segue. You talked about identity. There is nothing that identifies you more than your email address, your .com address. I don't think a lot of people know that your Ethereum address, which is this, hexadecimal thing, alphanumeric string of numbers, which is very difficult to remember and to write down, can actually be represented as a simple kind of machine readable, human readable piece of text. So CamilaRusso.eth is Camila Russo's Ethereum address. If you want to send Camila a tip in ETH or USDC, she takes USDC, by the way, then you can, but you have to register it. And this brings us to our next story, ENS. So Camila, can you sort of break down why we're talking about the Ethereum naming service this week and why it's such a big story?
Sure. And by the way, my ENS name is camirusso.eth. If anyone does want to, if anyone does want to drop some tips there.
I think Robin may own CamilaRusso.eth.
Oh, maybe.
Yes.
Are you squatting, Robin?
Oh, I'm squatting. I've got everyone. I've got Bennington.eth. I've got everything. I've got Raoulpal.eth. I'm so going to be rich in the future.
One.
Yep.
Nice. Yeah. So that kind of like teases a bit of why ENS is so important. It is kind of the Web3 version of domain names, and we saw at the beginning of the rise of the internet how important domain names are. It's your piece of real estate on the web. So ENS is the same thing for Web3. You claim your name to yourself, to your company, to your project, to your protocol. We have Defiant.eth as well. And that can be used for for easily identifying your wallet address, which in Web3, we're seeing that wallet addresses are more and more becoming your identity. It's how you interact with different protocols. It's how you interact with each other. And I believe that ENSs will be able to be used in actual websites itself, like domain names. So it's a huge project, a huge kind of foundational piece of infrastructure for the decentralized web. And it's a project that's been around for a while. Do you remember when it was founded? But
about 4 years, I think. Yeah. It's 2017, I think. Don't hold me to that. But yeah, a while
I believe
anyway.
At least 2017. It's been around for a while. And so that means that throughout these years, everyone, or like most people kind of in at least the Ethereum community will have collected at least their own ENS name. So it's a project that most people, like at least people deep in the DeFi or like crypto community or Ethereum community, have interacted with and participated with. And so when the airdrop was announced a few days ago, of course it was very exciting because as it has become like custom and expected, airdrops belong to the original users of protocols. So whenever a widely used protocol announces an airdrop, all of the people who have been using that protocol, rightly expect they will receive those tokens. And I think it's become like something that we become so used to in DeFi and Web3 that we kind of forget that that's really not the case in traditional finance. It's like, okay, Tesla announces an IPO. That doesn't mean that all like owners, like car owners, will get a piece of it. Like Facebook IPO'd. I didn't get any Facebook stock, even though like I was I created my own Facebook profile very early. But in Web3, that's the difference. Users benefit directly from the growth and from kind of the IPO of their projects when they decide to issue tokens and open it. And it's it's like you receive that economic benefit of getting the airdrop, and then that also allows you to have some level of participation in governance as well, and that's a whole other kind of piece of the ENS airdrop, the governance, which was done through delegates, and I thought it went pretty smoothly. But yeah, I guess I'll stop there with kind of why ENS is important to this space.
Yeah, it's really profound when you realize that your interactions with DeFi protocols, your interactions with NFT protocols are a historical document. They tell people where you've been, where you've gone. For instance, if you want to buy a piece on the Henny marketplace, it will look at your wallet history and determine whether you've interacted with significant artistic entities in Web3, and then will rank you and your qualification to buy an NFT based on what you have done. DeFi protocols will be looking at the same thing, and it would be very impossible in the future for future employees or employers to look at your wallet history and determine, actually, you know what, you have the experience that we need because you've interacted here, you understand this. It's all there and it's all visible. That means that your wallet address and the identity attached to it is incredibly valuable. And being able to ring fence your unique, verifiable, identifiable version of that is more than just, hey, I post on Twitter and here's my name. It's here's how I get a loan. Here's how I take a mortgage out. Here's how I apply for a job. That's all ENS. What happened with the airdrop is they dropped a token which signals their move from basically just a company that built a piece of software, a lot of which was decentralized, but not all of it, to a mechanism by which everything is decentralized. And it particularly governs its multi-sig wallet, the treasury, and the registrar contract that manages the pricing mechanism of the domains themselves. So everything sort of financial that's built into ENS and how it runs is now decentralized. And if you want to enact a proposal, I can't just put my hand up and say I want to put a proposal forward. I have to support a delegate who will then put that proposal forward, and everyone puts their weight behind the various delegates that they trust. And you've got the likes of Coinbase putting themselves forward as delegates. This is a protocol and a piece of software that touches every single wallet on the Ethereum network. We will see versions of it rolled out across every single major blockchain. It is that profound. And because of that, the airdrop tokens themselves are extremely valuable. And that's literally the least important and least interesting part of it, because you see people kind of bragging about how much money they've made on the ENS airdrop. But absolutely 100%, as Cami said, this is a retroactive airdrop that rewarded participants in protocols when there was no reward. Uniswap did exactly the same thing. Everyone put them under pressure to deliver a token because every single other project was delivering a token. And Uniswap said, no, we don't need one. Finally, they did. Massively valuable token, and they probably now realize that they need it. And then when they needed to enact a piece of a proposal that would allow them to go lobbying the US government for crypto, now we suddenly understand why it's so valuable. This is a big deal, genuinely, but it just gets lost in the headlines of, oh, it's an airdrop and it's worth tons of money. Yeah, yeah. So much more interesting stuff going on.
Yeah, Uniswap, particularly after SushiSwap did their airdrop, sort of was kind of didn't have very much choice in the matter, it seemed, in terms of what their users were saying. You guys both made some incredibly important points, and I'd like to just highlight 2 points that each of you made. First, I think Cami's description of the infrastructure component of this was really very well said, and something that's very complicated to understand for people who aren't in the space. And second, also her description of how different Web 3.0 is from Web 2.0. That Facebook metaphor, I think, is spot on. I've been a member of Facebook for whatever it is, 12 years, something like that. And when Facebook IPOs, I certainly didn't get shares of the stock. I own my name, Ash Bennington, .eth, and so therefore was able to participate in the airdrop. This is something that's a very big difference, I think, in terms of the philosophy, the worldview of this space, and the idea that the users are really the owners as well as the participants, and also have a stake in governance. This is a very different paradigm for people who are involved in traditional financial markets. And to the points that you just made, Robin, 2 things stand out. First, great intro in the way that you tied this back to the NFT space. the idea that a hexadecimal number is a perfectly serviceable way of sending information back and forth, of sending value back and forth on the internet. But changing it to your name, it creates a kind of ownership and identity factor, some definite parallels there. And the second point is, talking about this idea of your history being kind of exposed by the address that you own at ENS. I mean, I think this is something that we are really in a brave new world of. There's going to be some upsides and some downsides to that. This is just a very different paradigm, and the idea of potentially exposing transactions that maybe 1, 3, 5, 10 years later you may not feel so enthusiastic about. These are some really interesting questions, and it's going to be a fascinating thing to watch.
Well, there's some interesting things about the ENS airdrop, which was 125,000 people were eligible, which is a tiny, tiny number. But actually, for a project like this, it's enough to do something with. I often try and frame crypto problems in a why versus a why not problem. And a lot of what you find when you try and explain this to people who are not in the space is they shrug their shoulders and be, yeah, why? Why do I need this?
Right.
By airdropping a token to people who wouldn't normally participate in governance, you turn governance into a why not problem. They already have the tokens. So why not participate in governance? Because they could. I mean, many people will have sold their airdrop tokens, but a lot of people who would have never participated in governance before will now start to think and maybe participate, because we like to talk about the value economy or value transfer, but this entire space really functions around participation. Like if people actually kind of stand up and participate. And what's so lovely about ENS is people participated without there being any incentive to do so. They just did it because they wanted to. And now suddenly they can. And these retroactive airdrops are really interesting in the way that they galvanize pre-existing communities to represent themselves better and feel privileged. Not everyone, but that kind of meaningful core of people. And of course, what's going to happen now is we're going to see more and more retroactive airdrops that are meaningless, but some of them won't be. And there are a couple on our radar that are of particular interest. Camila Russo, you know what they
Yeah.
are.
Yes. So I think maybe the day after, or maybe the same day of the ENS airdrop, Joe Lubin tweeted something that hinted that there might be a MetaMask airdrop, and that obviously set kind of crypto Twitter in a, like, on fire. Because if like ENS is like basic infrastructure for Defiant and Web3, MetaMask is a huge piece of infrastructure as well. I mean, it's the most used non-custodial wallet. It's how you interact with these protocols, and I'm sure everyone who has participated in DeFi or bought an NFT or done anything in kind of this like new open economy has interacted with MetaMask at some point. So yeah, Joe Lubin, the founder of Consensus, which made MetaMask this non-custodial wallet, tweeted, "When mask, stay tuned." So that obviously led everyone to believe there is a MetaMask airdrop coming. And then the question was, how will MetaMask use be quantified? Because it's not as easy as you think. Apparently, just having installed MetaMask on as like a browser plugin isn't an like on-chain action, so it's not recorded. And then the whole speculation is people who are swapping with MetaMask, because MetaMask now has this DEX aggregator incorporated in the plugin itself, and that is an action that is recorded on chain. So I'm sure like there's a bunch of people now swapping on MetaMask just in case that's what counts for an airdrop.
Well, it was interesting that this was kind of one of those weird things that came up. Someone said MetaMask is going to have to drop a token, and then Andrew Thurman from CoinDesk said, "Yeah, ain't going to happen because JP Morgan owns at least 10% of MetaMask's controlling entity, i.e., Consensus, and they won't want tokens on the balance sheet." And then
Right.
Joe stepped up, got a little bit feisty in his Joe Lubin way, Consensus is vigorously controlled by its employees, which includes me, and we're driving towards decentralization of several of our projects. The subtext of this is we are deeply shit scared about the SEC, about all the different things that have been coming out, and we are now operating at light speed to decentralize some of our big products because otherwise we could be in deep trouble. And as Cami said, the participation is in the swapping process. The MetaMask swap facility is responsible for, I don't have the numbers off the top of my head, but like MetaMask never made any money before. Once they instituted swaps, made tons of money. MetaMask is now profitable. And of course, it's the one that everyone's heard of, but they're under pressure from Coinbase Wallet, which is a pretty decent decentralized wallet as well. It's likely that we're going to see a mask token. The other one is OpenSea. So anyone who's interacted with OpenSea will know that they don't have a token, and they have an enormous amount of investment and probably like 95% of market share, something obscene like that. And if they were to do a token, a retroactive airdrop, some people would get very rich. And
You're waiting for that one, Robin.
I say nothing. I say nothing. Just look at my wallet history. You'll see everything. I cannot hide. So, Ash, did you sign? Did you get the airdrop? Have you checked?
I haven't checked yet, but I would
check.
assume. Yeah.
What are you doing? You shouldn't be on this call. Go check your ENS.
Real Vision doesn't give me any time off to do that. Come on, man. I'm doing interviews.
That's true. That's true. So I think the big picture here is like, all of this looks like from the outside, looks like free money. And if you remember the Bitcoin forks, free money. Bitcoin Cash was responsible for it's just an obscene amount of money flooding into the market. And I feel like a lot of that additional capital was responsible for the obscene rise at the end of 2017 in Bitcoin. But I wonder if you have any thoughts on this idea of just magicking money out of thin air and how wholesome or healthy or what kind of signals that sends to the outside world.
Well, I'm a fan of the space, and so I love the idea of it continuing to develop and to bring in a broader user base. I would also add that, to the point that you were making, by distributing these protocols, you're also building a political base, and it makes this have a constituency, so that when congressional legislators decide that they want to step in and regulate, as obviously we've heard, and also some, as you guys pointed out on the last show. A report coming out of the United States Treasury Department talking about stable coins. What it means is that there's a broader base of the electorate who actually participates in this in a very direct way, who may or may not, depending upon the legislation, be happy about what comes out of Washington. So it seems as though it broadens the base and it increases potentially some of the political pressure down in Washington in the way that this space gets regulated.
Cami?
Yeah, I love that kind of political aspect, because these protocols are creating their own sets of politicians, and we're seeing kind of this new class of protocol politicians emerging. With ENS, what happened is that the protocol gave a chance to anyone who wanted to step up and become an ENS delegate. And I don't know how many there were, like many dozens of delegates were part of the group of people that recipients of the airdrop could delegate their tokens to have them participate in governance. And I think this model is just recently emerged. I think Gitcoin maybe was the first to implement this, but I think it has really good results so far, because what happens with this decentralized governance is that participation is usually very low, because you have thousands of people getting free tokens, and then it's great that you have the option of participating in governance. But because of how UI is working, it's not easy to keep up with when the votes happen, and there's no push notification to tell you, hey, go vote on the new Uniswap proposal. So participation is very low. But But with delegates, what you have the opportunity to do is, give your voting power over to someone who is, whose job it is to kind of look at governance and participate. And so, if you trust someone in the delegate group that is going to vote according to your interest, you can have this kind of proxy participation in governance. So yeah, we're seeing our own like protocol politicians emerge, and I think that will just increase representation across DeFi, hopefully.
Yeah, I have to agree with that. That we're living in a time of a need for great advocacy for this space and to protect something of the sanctity of the ideals that we're looking to protect here. But we're also seeing the wildest experiments and some really bizarre things happening. And I think as long as we can keep it weird and protect some of that weird and into the future, then there's definitely some hope. I think it's probably time to wrap it up here because once things get political, they tend to get a bit dry and a bit lengthy. And this
Well,
has already gone on a very long time. I don't know if you read the infrastructure bill. I certainly tried to, and then about page 150, I gave up, and it's nearly 2,000 pages long, that thing. So, whew.
Robin, can we commit to keeping it weird on this show?
Yes.
For sure. For sure. I
Yay.
literally, you guys don't know, but like I had a pair of shoes ready to go. These are in fact NFTs that have a real life counterpart made by the lovely people at Artifact. But like these are real things that I can wear to a really terrible party in New York next time I'm there. So I'm looking forward to that. My thanks to Camila Russo, our chief editor of the Defiant, and of course to Ash Bennington from Real Vision. This was our show, and we will be back next week with another one to talk about all the good things that are happening in crypto, DeFi, and the world of finance. Thanks for joining us. We'll see you on the next one.